Hello, we are Group 5 from FM474 Finance 2 class. This is Robin Wang speaking. In this group, you also hear analysis from Jovan, Jason, Kazuyuki. In the past few weeks, we have been looking at a company called Smith&Nephew, a medical equipment producer and manufacturer based in the UK, but publicly listed in London and New York. In the past few weeks, we analyzed the cash flows, capital structure, as well as market evaluation of this firm. And today, based on those information, we will further talk about the payout policy of this firm from the year 2010 to 2014.
There are two types of payout policy, and one is dividend, and the other is share repurchase. As for the dividend, this company, Smith&Nephew, pay the dividend twice a year, one in April and the other in October. And as for the share repurchase, this company started a new buyback program in the year of 2013. However, this program has been stopped in the following year.
Smith&Nephew has a progressive dividend policy. Each year, an interim and a final dividend will be paid out, and the total dividend per year has been increasing since 2010. This progressive dividend policy is seen favorable to shareholders as seen from the increase in share price will be shown later. The dividend policy is aligned with information asymmetry lecture that we have learnt last week, since it is actually a sign of good company management that the company is able to pay out an increasing dividend per year. We will expect that in year 2016, there will be an increase in dividend to $32 per share, since there has been a stable increase of dividends since 2010. Next, we can see that from this chart, there's a progressive dividend policy as from 2010 onwards, dividends actually increased from about $15 per share to up to $30 per share in 2014.
So after analyzing the progressive dividend policy of Smith&Nephew, we are now looking at whether the shareholders and how they react to this particular policy. And we can see from this slide that they seem to be generally quite pleased with the dividend policy of Smith&Nephew. We can see the chart where in the middle of 2011 until 2014, we can see an upward trend within the stock price. The stock price can be affected by the performance of the company also, but we strongly believe that the satisfaction that the shareholder have in terms of the dividend policy would also help the stock price to increase, which is shown by the graph.
Now we're going to look at the share repurchase or buyback policies of Smith&Nephew. There are no specific patterns with regard to his share buyback activities over the past 5 years. However, there is an important event taking place in 2013. Starting from May the 2nd, 2013, Smith&Nephew started a new share buyback program to return about $300 million of surplus capital back to the shareholders. This was instituted as a part of the capital allocation framework. However, this buyback program was suspended in February 2014. Its suspension followed the announcement of requisition of ArthroCare Corporation. These numbers can be seen on the right-hand side of the chart included on this page. There is a spike in 2013, and as we announced the suspension of this buyback program, the buyback value dropped slightly in 2014. Here is all of our analysis of Smith&Nephew's payout policies. Thank you very much for your attention.